Good morning and welcome to the Leadership in Insurance podcast. I'm your host, Alex Bonds, and I'm very lucky to be joined by Anna, who's CEO of Vitaance. Anna, good morning. How are you?
Good morning. Happy to be here.
Yeah, good. You're in a significantly sunnier part of the world than I am. You're based in Madrid, aren't you?
I am, yes, sunny Madrid.
Yeah. Although I go to Spain on 2 days' time, so I'm quite, I'm hoping to absorb some of that sunshine that might still be left there. But look, before I make a really terrible attempt at explaining the Vitaance business, it'd be really great if you could introduce what Vitaance is and what you guys do.
Certainly. Well, I'd like to think of Vitaance as the first life insurance that you want to use. We're turning death insurance into life insurance. We're an insurtech company and we apply artificial intelligence and data science to help our members live a better life from the minute they purchase the product. They don't have to wait until the claim occurs. So we connect their wearables information to their Vitaance account and they can learn how to develop new wellness habits and they get rewarded for it.
Okay, nice. Very good. It's a model we're sort of starting to see more of. I wanted to say, this is not something I've asked you beforehand, but culturally, I think there's an acceptance now of that. And I wanted to kind of talk about kind of wearables, because I'm someone that I like run. I'm obsessed with my stats on my watch. Do you think there would have been an acceptance to do this? Has there needed to be a cultural shift to people being comfortable with sharing that level of information? Because obviously it is, I think there was always a fear with insurance companies that if you tell them too much, you can't get insurance. And do you think we've needed to have a cultural shift to kind of allow that thing to happen?
Definitely. I think that there is a combination of both things that you mentioned. So, we as individuals are more comfortable sharing data with third parties because the business case and the use case for us as users has been proven. You do get value. I'm like you, I'm obsessed with my Strava stats and that's something, you get almost like a second kick, one when you run or exercise and the second kick when you see your stats and your improvement. We like measuring things. And that's important. One of the things actually is that Spain, surprisingly, because I wasn't expecting that, is the country in the EU with the highest adoption of smartwatches in Europe, and one of the highest in the world as well. So, for some reasons, whether we use them or not, or for the right things or not, but we do like to have a look at it and measure. And that's really what we're focusing on measuring improvement. It's not about being super fit or super healthy, and we only want the fit people. It really is about improving and helping people to improve their lifestyle. So, we obviously, it's not like we want all the sick people in the world only, but, we just want people, customers, and help them to improve. So that's one side of it. And then, insurance companies, obviously, they can use this data for underwriting purposes. It's not what we do. What we do is just based purely on managing the risk actively. So why wait until the claim occurs? There is a death or disability. We believe that we can be much more proactive and add value to people's life by using this data and artificial intelligence to nudge them in the best way to improve their lifestyle. So, we get a lot of biometrics really from a smartwatch, and our algorithm can detect which ones are lagging. For example, if you're very sedentary and your steps are less than 3,000 steps per day, the algorithm is going to perhaps set a goal or suggest a goal or objective or challenge to increase the steps you take every day gradually. So it's not about monitoring you, it's about helping you to live a better and healthier life. And when you do get those habits and you keep them up for a month, 2 months, 3 months, we start rewarding the member as well. And we think that is something that is a change. So it's not to keep an eye on you, it's to help you and to reward you if you do. If you don't, you don't, right? You're still insured. but overall, it should really improve the risk profile of our portfolio.
There's been a shift in the insurance industry, I think, as a whole, in the presumably, I mean, I think it comes from any industries, but that kind of relationship with the consumer, and that's whether it be commercial consumers, whether it be kind of individuals, in that if you share us more data, there's almost like a collaboration now between the consumer and the insurer to make them a better risk. And we've seen that in like ESG driven underwriting, about kind of like working more with the clients to move them towards ESG initiatives. We've seen there's a business called Counterpart, like that I'm aware of in the US, where they engage with small businesses and help them with their kind of D&O risk exposure. So the idea being that they're a better risk over time. And I've always thought it's such an interesting strategy, because it's got two benefits from a business perspective. Is that one, you've got a better risk over time. Hopefully, you're encouraging people, you're gamifying, so people become more active, and therefore they would like to think they become healthier, and therefore a better risk. But secondly, you're improving the levels of engagement. So they become a more sticky customer, because you've got more opportunities to impress them. Because historically, insurance has just been that thing you buy every year. And I realized the other day that I had life insurance, and I thought, I don't even know who it's with.
Absolutely. I mean, when we were doing our user research before starting to work in Vitaance, that's what we found. It was just shocking. Even friends, obviously, it's the first people that you look around you, and you ask them for a friendly 1.5 hour interview, which is something that you really want to do, to talk about your life insurance for 1.5 hours. And I got this a lot. I don't have life insurance. It's like, actually, you do. In my past life, I was a broker. So, I do remember placing the life insurance policy for your employer. So you not only have one, you have a pretty good one, right? If you dug a little bit deeper, it's like, you have a big mortgage. I know you, and your bank probably would have asked for a life insurance policy when you took out the mortgage. And it's like, oh yeah, that's right. That comes out of my bank account as well every month with the mortgage. I don't pay much attention to it. And if you dug a little bit deeper, perhaps there were even 3 policies, right? So it's like, this is crazy. I mean, that's how little value the industry is adding to that person up until that moment. We need to change that. So it's about making a super intangible product. It's probably the most intangible of all insurance products. Is the one you never want to use, right?
Yeah.
So let's make it more tangible. Let's generate some engagement. At the minute, I remember exactly the minute I decided to do this and to launch a company that would do only life insurance. I heard the CEO of a very large insurance company, is one of the top 3 in Spain, pretty big in the world, say that life was the perfect product because it didn't have a client, right? By the time they got to use it, they were dead, right? So I thought, God, there is a lot to be done here, right? There is a big opportunity.
Wow.
So not only they didn't see it as a problem, they thought it was a great thing, very little work, you just get paid, and if they cancel, they cancel. What am I going to do? Such is life. So I decided that's it. I have to do something, and really change this product, because it's necessary. It fulfills a very important social aspect, provides a safety net for a lot of people. It can really avoid a tragedy turning into 2, which is the death or disability plus the financial disaster that comes with it in a family. It takes an average of 5 years for a household to recover from the death of one of its members. So that's big, right? And life-changing for some people. It could mean that you can continue your studies if you're a kid whose parent has passed away, or keep a house and things like that. It's pretty big. So it's great that it provides peace of mind, but it's not providing anything else other than that, which is enough. But right, I'm sure there is room for improvement. So it's like, okay, if we look at interests and see how we can align them, it's so obvious. People want to live more and better, and so do we as an insurer. So if you're transparent, you can be, because there is no hidden interest. I want you to live more, you want to live more, so I'm going to do my best to help you do that. And there are no tricks or no gimmicks. It's pure honesty and transparency. This is what we want to do. It fits in with probably most people's expectations, and that's also why sharing data it's become something much more mainstream and more accepted, because they're not going to use it against me, they're going to use it in my benefit. And that's really what we focus on doing, creating engagement and making something tangible that you didn't really think that could be tangible before now. And that's the focus.
There's so much I want to get into there. I'm fascinated by what that life insurance company guy said, because even just listing them out, it's like your customers are indirect in life insurance. Well, they have been, and that's what's quite interesting about the way that you're approaching it, because the person that's paying the bill on this is actually now benefiting from the product whilst they're still alive, like you say, because previously it's been a kind of peace of mind beneficiaries. But even if you take away the sort of engagement level that you're giving, so someone's it's the idea that someone would run a life insurance company and think that there are no customers, or the customers is basically dead, is quite shocking. And it's quite shocking that in terms of kind of the sort of callousness of that statement, because of course it's about protection, about people, and I've got, it's exactly the right thing. I've got mine for my mortgage, and it's just so my partner doesn't have to pay for it. That's why you do it. But to the idea that there'd be no customers, that I actually think about it, me paying it on, it's for someone else. So, but that kind of brings me to a question that I wanted to ask you. You were a broker. Something that's been said on this podcast before, which I wanted to sort of get your opinion on, was that the previous guest has said historically in insurance, really, as an industry, and this is a very sweeping generalization, is it serves one customer, and that's the broker. I wondered what your thoughts were on that, because obviously you've been a broker and now you're entrepreneur. What was your thoughts on that statement? Do you think that's fair to say?
Well, obviously I'm a bit biased.
Of course.
It's not going to be 100% objective, but I'll try. It's funny because I always saw myself as a consultant, as an independent advisor. And to be honest, that's what a broker is meant to be. Perhaps it's because I work for an organization that has one of the highest ethic standards and ethics code that I've ever seen. I could not accept even a gift from a grateful client. Anything that would have to send it back or donate it to charity. It was just one of those things. A client or an insurer or anyone, it was just full transparency, and that's something that's kind of deeply in my DNA. And that's probably why I chose that employer. But that's what regulation also says, and what everybody should do. The broker is an expert. He's a subject matter expert, and he should work for the client and recommend the best option for them. You have to fact find, get to know them and know their needs, and then scout the market and offer the best option for their needs. If that doesn't happen, yes, then the industry is working for the broker. But my humble opinion is that they play actually a role, and an important role in the industry, and that they should really advise people. That's one of the reasons, you see many startups, many insurtechs, that they want to, do away with intermediation and they want to end this. I think that there is some value to be added, right? When it was pushing paper from one desk to another, little value is added. That's obviously technology can help hugely with that. When it comes to advice, they do have a role to play. There is a fascinating fact And that this happens to me when I'm having a drink with friends. It's like, yeah, you're an insurance broker, haha, and the jokes come out and whatever. But if you think the more sophisticated a client is, like big corporates, like professional clients, the more likely they are to have a broker. Why would they engage a broker if they're super sophisticated? They're very clever, very smart. They have risk experts in their teams. Why would they do that? Obviously, they add some value, right? So it's about finding the right broker. But I agree there is, some lack of transparency. We need more of that in the market. Only the brokers that do add value will remain. A lot of them will disappear because they're playing the game and, they're just perhaps looking for the highest commission or whatever it might be. But there is room for the good ones, I think. And I think that they will stay in the market and they will be adding value to clients. But those that are not fully transparent probably will disappear.
I think part of the angle that a lot of the newer insurtechs or certainly people that are coming from outside, not necessarily having come from the industry, I think some of it is some of that conversation is around that the insurance industry is aimed at brokers because the language and the lack of transparency suits kind of experts in the field, and it's very difficult to navigate. And I think that's where it comes from. Because I think it's interesting because there's an interesting parallel always. So I've been in executive search for a long time, all in the insurance space, and the broking world and what I do has a similarity in terms of client relationships. You're an intermediary. And it's funny, I was sort of smiling when you were saying that kind of the more kind of the larger, successful, sophisticated the buyer, the more likely they are to engage properly in the process. The less, the sort of more complex, messy relationships that we tend to have are people that don't see the value, but it's because they've sort of either they're probably not at the size and scale and sophistication that needs to kind of recognize that kind of need. It saves time and money, and I think that's kind of a good, interesting parallel. But I wanted to talk on kind of fair and transparency as a promise that you make on the website, to be fair and transparent, and I just kind of want to understand what that means from a practical perspective. How do you apply that to the business?
Yeah, I think it's super related to what you just shared there. It's about making things simple, giving everyone visibility. I started saying this, we can be fully transparent on everything we do because we don't have any hidden agendas. We want people to live more. We're open about it. So everything we do is with our customer in mind. Our customer comes first. There is a lot of talk about this customer centricity and nowadays, and not really sure what it means. But for us, it means that the first thing whenever we're going to make a decision or change anything or that is think about, is this best for our customers? If it is, okay, we'll do it, and we find the best way possible to do it. So that allows us to be very transparent and fair. I was talking about this before as well. Is it only fit people we want? What happens if we discover, some people that are not so fit? Are we not going to cover them? Are we not going to give them insurance? Well, that kind of defeats the purpose of insurance, which is the mutualization of risk, right? So the healthy ones, in a way, are subsidizing, well, not the healthy ones, the lack of claims subsidize those people that actually, things happen, life happens, and, it goes through you and you pass away. So that's the purpose. When Scottish widows invented life insurance back in the 18th century, it was about protecting the widows of those pastors that actually passed away, and otherwise they would be homeless, their kids would be in the streets, and they needed it. That social purpose still remains. So you can afford to be fair and transparent when your mission is super clear and it makes sense to people. And that's also related to that complexity of the wordings. Who has read an insurance contract? I have to admit, I rarely read a full insurance contract. We have this commitment, not just to make them shorter, but also to use plain language. Why making things so complex that you need an advisor to understand that contract, right? So that is not what a broker or an advisor is meant to do, is to help you analyze the best your needs and make recommendations. You should be able to understand the product by yourself. So that's really where we focus, being really fair, really transparent. And use regulation as well for that, because sometimes insurance contracts need to be that lengthy and that complex, because the regulator kind of makes you do that. You have to cover all these things. It's like, yeah, but people don't understand. It doesn't matter. You have to have them all in there, right? So we've simplified it a lot, and we try to make it understandable for a lay person. And that's really how we focused on that.
Yeah, it's another parallel actually that I was thinking that I have these obviously contracts with my clients, and the amount of legal jargon that has to be in there just has to be in there, and forever we're having this conversation going, can't we just take that out? And everyone just wants a one-pager that says, this is what I'm going to charge for. These are the kind of restrictions. These are the limits. And I think even just the presentation of the information is a challenge, because I don't think I've ever had anyone on the podcast, and we are about 60 episodes in now, all insurance professionals or people who run insurtechs, and every single person goes, do you read your own insurance contract? Universally, everyone's like, no. So it's kind of, we're going on that promise. We're going on the promise of the thing that we press buy on, particularly if we're doing a personal lines cover. What does it mean for technology? Because I think with a lot of the conversation we've had is around culture and about ethos and about the kind of mission of the business, and all of that kind of makes absolute sense. But obviously you're an insurtech business. What does it mean from a technology perspective about kind of building customer first products? What implications does that have?
It's a good question. You see, we actually see ourselves as a deep tech company. I think there is a new generation of insurtech companies that are actually changing deeply the value chain of the product, and even the actuarial science and the algorithm behind them. It's not just about selling policies online anymore, or kind of cool distribution, or this type of thing. It's about really changing substantially the core of the insurance product, and that's what we do. So we have a very strong focus on artificial intelligence and machine learning, obviously data science. And data science, as you think about it, is actuarial science, right? Is an evolution of it. So we focus very deeply on that. So it has implications in terms that it has to be understood. So if you think about our business model, which is translating lifestyle changes that have an impact in your well-being, and how you translate that into a reward, that has to be very simply explained, and conceptually it's easy to understand. So I look after myself, I get rewarded, great. But that's making that simple with technology is a bit of a challenge, right? There's a lot of rules and stuff that have to be correctly captured within the algorithm, and that's one of the bigger challenges that we are facing at the moment, making that simple and understood by our clients. And it also has to make sense from a business perspective, right? We've seen in the past, all of a sudden, you saw like big discounts on premiums, for example, and to me that's fishy. It's like, why the same product was 20% more expensive 2 weeks ago than today? I don't get it. Were you taking advantage of me two weeks ago, or what was the right price the old price, the new price? Are you just making up a number? That's a little bit, the impression I get with these things. So, that's not what we want to do. Insurance has a price, it has an actuarial calculation behind it, and it has to be purely based on the risk and the interaction with the customer. And that's the challenge, and applying that is pure tech, and it's a pure tech problem. And it's a problem that we thrive on solving. So it's a lot of fun doing that. But that's the biggest impact it has for us at the moment.
Yeah, that's a really interesting point about the kind of the changing kind of big discounts and things. And there's a couple of things there that I've mentioned a few times, is that I've obviously got a professional indemnity cover for my business, and the amount of times I'm asked this question about, oh, well, how much cover do you want for certain elements of that cover for claiming? But even someone that works in industry, I don't know what the average claim size is. So if you have that information, i.e., as the insurer sitting that side, if you know what the average claim size is, then that's the cover I want. But asking me is irrelevant. So there's the kind of that double-edged sword of like, using that data science to fill in those blanks for your customers on their behalf. And then the second thing, to transparency, I think where we saw those kind of big discounts, that just speaks about the insurance industry of old, where insurance was sold, not bought. We're selling things to people. And the more that you strip it back and you go back to Scottish Widows and you say, what is the true nature and the purpose of insurance as an industry? And I do believe in that. It's a social good. It's the pooling of the many, the pooling of risk, the aggregating of risk. It's and if we strip it back to that, it's like it's very easy to see that we might have got away from that, and now we're just trying to sell additional products to people. And almost the individuals become the product, that we sell to, which is a bad way to be. I was going to ask you, do you think whether insurance has culturally lost sight of the customer? But I think we've covered that in several other questions, so I'm not going to go over that. I was really interested about regulation, and I've started to ask this from a few people. And I know we've touched on it, but I actually don't want to ask it as a hindrance. Do you think regulation can be a form for kind of innovation as well? Because the sort of constraints are the things that you can work within, and that's where the creativity can sometimes come from. So I just wondered if you thought that was something that caused innovation necessarily than hindered it occasionally.
Yeah, I think regulators are making a huge effort, right? It's not like they're completely detached from the reality of the market and society. We're seeing sandboxes in the UK, in Spain, in many places, and they are in contact with us. It's like they're almost, do you have a project? You want us to look at it. They're hungry for innovation, for new things, which is a good thing. But you're right, sometimes when, there are barriers, there are limitations, you have to be more creative to overcome them and find ways to do it. So I agree, it's a good thing, especially when they're trying to protect the consumer. That is the purpose. This is weird, but in a way, I'm a big fan of regulation, because it has made the insurance industry what it is. Not many financial institutions survived or even thrived on the financial crisis we had a couple of decades ago, or 1 decade ago. Only one insurance company was affected and had to be rescued, but the rest were fine. It's a solid business, is there to protect society and to provide that stability. So obviously we're going to be heavily regulated on solvency. Is it too much? Perhaps, but if you think of life insurance and something that you may purchase with a 30-year lifespan, you want your insurer to be there and to pay the claim when it's needed. So some degree of regulation is necessary on that regard. Mm-hmm. When it comes to consumer protection or to consumer rights, they could do a better job. by, the intentions are fantastic, but, the by all that legal jargon that has to be in the contract, they make it almost unreadable to anyone. And that's not in the best interest of the customer. So it's around that where I think they could do better. But certainly, it gives room for, new players like us to innovate, to become even more transparent, to share our profits with the clients. So if you look after yourself, my profit pool is going to be bigger, and I'm giving that back to you. That's how, it's not about lowering the premium, it's about rewarding you for doing it, because I'm not going to penalize those that don't look after themselves. So what I do is, if I make money, I give it back to you, because it's because you looked after yourself, my risk is lower. And that's really, probably, it could be fair to say that that is an innovation that comes out of regulatory constraints. So in a way, I agree that it could be almost an incentive, to get you to think more creatively.
Yeah. No, I completely agree. I think it's just an interesting point, because I think there's a bit like you were saying, there's been a sort of journey on the insurtech timeline. I think very early on in the and I suppose I'm talking about insurtech in this sort of modern iteration, because I always sort of feel bad for some of those companies that have been around for 25, 30 years that have been providing tech to the insurance industry, and they don't get put in the insurtech bracket. But if we think about the kind of last sort of decade of insurtech, and where we had lots of new entrants in that were from outside the insurance, and they were coming from a pure tech perspective, and regulation was seen as this like enemy of the state, as it were, and it was always frustrating for people. And we've just seen the maturity of businesses, and we've seen different people coming into the industry. There's been more understanding. I think we've seen better teams that have got investment. So these teams are kind of a blend of insurance and technology. And now there's kind of more of a kind of flow of, no, that needs to be there to protect people. We need to work with it, and we need to work with people rather than being this hindrance. So I think it's just interesting to discuss. Another thing that caught my eye from sort of the website, and I'm very naughty, I always like to look at people's promises on the website and then challenge on it. But I really, something that springs to me in my world of recruitment is that it was a key promise about having a diverse and inclusive team. And I know why I think it's important, but I wanted to get your thoughts on why it's important, and then also how you're going to hold on to that as you grow, because that's the challenge. Is that it's kind of easier when you start, but as you grow, that can be harder to achieve.
Well, actually, it hasn't been easy even as we started. It's been a challenge from day one, and we're only a few months old. Obviously, I'm a female CEO and entrepreneur, which is not that common, or is a minority, I should say. And that's one aspect. But we were talking about the societal kind of role we play. So. If we want to solve problems of today's society, that those solutions have to come from a diverse team. So if our society is diverse, how could we understand the problems? How could we solve those if we're too detached from real people, right? I've seen it. I've been in other companies, startups that they're all white males, no older than 30, and it's like super smart people, very clever, with a personal commitment with diversity as well, and they're in the world, but how can they understand how somebody very different to them relates to insurance, or how can they relate to their problems, if they have really nothing to do, they may not have had to think about it ever in their lives. So, that's something that I did not want to happen to us. Now, it's not easy, to find the best talent. And, I'll give you an example. We were looking for a head of technology, and out of 200 applications, I don't think we had any women, actually, perhaps one, but no, that was an outbound reach. So that gives you an indication really of how difficult it can be sometimes. But the reason we want to do it is because the problems we solve are not exclusive to a part of society. They're common problems. So we have to have diverse people solving them. And how we plan to keep this up over time is setting the basis right. So, we're making sure that everyone we hire, it's not about cultural fit, it's about cultural add, in our opinion. So we don't want people to fit our values and our culture. We want them to add to that basis, and we go from there. So that's something that I read about a couple of years ago and really stuck with me, because it's a cultural fit interview. And it's like, why do you want them to fit in? If they're different and they bring something else, they're adding to you, they're making you grow, right? And it's like, wow, that's what I want for my company. And that's how we are approaching it. There's only like 12 of us at the moment. It'll be probably 24 in January. We're hiring like crazy. But we have people in 6 different countries at the moment as we speak, and 3 different continents. So that for us is a way of doing it. But we're not looking for people in any country or any race or a specific gender. We just look to that cultural add. And it happens that it's diverse people that bring it, surprisingly, right? Different people bring different things, but that's how we're doing it.
I think you've already just nailed one of the mini clips we're going to cut from this video, because I think that's such a good way of looking at it. Like, cultural add is it's going to get loads of people into trouble, because one of the reasons people reject people all the time is going, oh, we don't think you're the right cultural fit, and we know what it's a really lazy bit of feedback, and it doesn't really it's a bit sort of meaningless, but so true. And I work exclusively with startups, either kind of Series A through to about Series B, startups to scale ups, but predominantly at the earlier stage. And there's a lot of conversations that happen about cultural fit. Now, I do believe that certain people are built for businesses at earlier stage, because you have to have multiple skills, you have to be comfortable being uncomfortable, you have to move at speed. There are lots of things that are kind of common traits within an individual. But what that looks like in terms of a kind of personality profile, a background experience, can be as diverse as you like. But I think we do fall into this trap of people kind of want this cultural fit, but the danger can be that you get this group think. And that's particularly dangerous when you're challenging the status quo, when you're trying to do something new, because you can be blinded to these alternative viewpoints, which may challenge your idea or refine the idea, or even just, at the very least, just make you miss out on a whole opportunity or an area of the market you might not have targeted. So yeah, I think cultural add as opposed to cultural fits is a superb way of looking at it. So I'm definitely going to steal that one. I'll be talking about that a lot.
Okay.
You talked about raising investment, and I know you've done that recently. That was one of the things that I was in Barcelona recently, seeing my colleague, and you were the talk of the town. The round had just been announced, and I wanted to talk to you about some of the sort of other Spanish startups I've spoken to in the insurtech space have felt kind of bit restricted, or a better way of putting it, they felt they had to sort of perform to a higher bar to get that investment, as opposed to an insurtech trying to raise money in the US or maybe the UK. I don't know what you felt about that, but I wonder whether you thought that was true, or just to kind of understand a bit more about that, your experience of that fundraising process.
Yeah. I mean, initially we had no intention of seeking international funding. There was a lot of interest locally, but we were approached by a British fund actually to lead our seed round and obviously we were delighted, and it was a fantastic experience, and it was almost overwhelming, how much interest we had in the round. We were looking for much less money. We had interest for about 5 or 6 times what we were looking for. So perhaps it's not our experience fully, However, I'd still agree.
Yeah.
I think we looked at through a different lens, and there were some investors that didn't invest, and some VCs that actually later changed their mind and called us back, but obviously have not made it in. It does seem like there is a different measurement. I know of that there's some great founders in the US of live insurtechs. Won't give you names, but have invested in our company as angels, very successful as live companies in the States. And they were shocked. It's like, why are they asking for metrics? This is ridiculous. I mean, at this stage, you're a fantastic team, international, have the experience, have the insurance experience, the tech experience, gamification experience, well-being experience. I mean, what more do they want? Like, you have it all, right? So yes, there does seem to be a different metric to measure companies in Spain or other markets, but that, in my opinion, that's really short-sighted. I mean, it's a fantastic launching point for the rest of Europe. The market is big enough to test many things, get some learnings, find product market fit, and then really go to the rest of Europe, Latin America. And a lot of investors are starting to realize that, and they're looking for, there is enough deal flow in the country to even open offices in Madrid or Barcelona. And, up until now, that's favored the local investors because they could get better deals. But now I think the competition is on for them, and there's a lot of founders that, are very capable of going anywhere in the world to find the right funding. We just hope that, what we've experienced becomes the norm and not the exception, because even with a very successful round, we have found some investors that had a different approach to our metrics than they would have had to others, definitely.
Yeah, I think I love looking at the cultural differences between, usually I'm looking at like funds and where they're based. Like there's always a big talk about, in the US, funds get in big, they get in earlier. In the UK, it's a little bit more, we want to see product market fit. It tends to be kind of a slower burn. But we've had less conversations about culturally how difficult it is to raise money from different geographies. But I found that interesting, just because we've happened to kind of speak to quite a few Spanish insurtechs, in that, just even looking at the numbers, look at the numbers raised at kind of seed and Series A. So smaller rounds, and I'm a big one on raising what you need to achieve, and if you raise a lot, sometimes it's not a good thing, too much too soon. But it's interesting seeing the kind of rounds raise up. But as you're saying, as the kind of it's opening up, there's more momentum there. It will be interesting now. We've got the international kind of spotlight. What happens in that regard? Because that is a really easy. We're seeing some huge numbers now dropped into rounds, and I know the insurtech, I think it was something like $11 billion year to date, 40 million a day being invested into the sector, which is just staggering. But that's always outweighed by a lot of that's going into the sort of big established big insurtechs across the globe. So no, it's fascinating. Well, look, you have raised this money, and clearly you're growing pretty quickly and doing so. What does 2022 hold for you? I know it's kind of very early stages, but what's in the plan, the playbook for next year?
Well, we have a go-to-market that it's very defined, it's very well defined. So we are a B2B company. We're selling employee benefits and some individual policies, but on a reactive way. We're not active, so that means we spend no money on marketing. All our seed round is going into technology, building the team, and building a successful culture, right? So we'll probably, there is a lot of interest from international investors and local investors in leading our Series A. So we don't know when that will be. We closed the round in October. So we were hoping to raise again in October. Next year, quite possibly, it'll happen before then because of the interest that there is in the market. But we really are thinking of capturing quite a bit of that value in Spain, learning some lessons, not just about product market fit, which we think we're quite close to it. It's the feedback has been quite overwhelming from clients as well, positively overwhelming. And we think there is value going to other countries. So we'll probably start to look at one or two countries where we can test as well our expansion. Our insurance product is very good, and the reason that we're thinking about it is because clients are telling us, wow, I love it, but I want it for my employees in Spain and France and the UK and Germany. So that's really encouraging, and it does sound like we could actually open these countries with a few clients already with us. So that's a fantastic way, to go international when you already have clients in those countries. So that's probably what's on store for us in 2022.
What is it about the product that's kind of making it stand out? What are the clients feeding back, which is making kind of different from the rest of the products out there? I know we've obviously talked about the sort of gamification and the kind of practicalities, but is there something that the clients are feeding back to you that they specifically like?
Yeah, I think, before the pandemic, we had already, well, as I say, I used to work as an employee benefit consultant for years in the UK, Ireland, Spain, Portugal, I had a brief stint in France as well. And I had seen, and I think the market, we had all seen a shift from external metrics, before clients would ask you about benchmarking with their industry, what's the local benchmark for benefits, how do you approach this? And we want to be competitive, or we want to be on the 50th percentile, or whatever it might be. And we started to see a shift towards more internal metrics, employee NPS, index happiness index, things that, we were, what's happening? They're not looking outside that much, they're looking inside. Are their employees engaged? Are they happy? And that was a trend that was very clear to everyone. And then the pandemic happened. And, all of a sudden it's turned into a top of mind concern for most companies out there. They're having problems with burnout, they're having problems with absenteeism, they're having problems with sedentarism, they're having problems with mental health, which is something that we will tackle in 2022 as well as a priority in our product. So that's there, right? And that's really helped us. How do I engage my teams remotely? Well, you can get them to collaborate on goals, on challenges. They can get collectively rewarded. So the feedback is like, okay, you come at the right time. This is something we wanted to do. And you have to think also that life insurance is almost mandatory. It's on 90% of the collective bargaining agreements in the country, but also it's the most common benefit, and it never even makes the ranking of the most valued benefit. So what we're doing with this is turning a cost into an investment for them that they can measure and they can see their return. Because it's okay, 1 in every 1,000 employees locally now are using insurance, life insurance. But with this new model, I don't know, it could be 30-40% engagement. With the staff are using it on a daily basis almost, or weekly or monthly. But if you look at monthly, perhaps engagement is nearly 100%. Almost everyone is using it. So then you look back and they say, okay, well, your cost is comparable to others, and I'm not getting anything back beyond the financial protection. So this is something that I really like. And I have a problem with my employees. that I need to solve, and this is helping me to do that. So that's the feedback we're getting.
Awesome, brilliant. Well, look, thank you so much for being a guest. I've really enjoyed this conversation. There's so many takeaways for me. I think cultural add versus cultural fit is going to sort of be resonating in my brain for a few days to come. So, if nothing else, thank you for that. But it's really exciting as well to sort of have someone on at this part of the journey. So, congratulations on getting to this point to date as well. And I'm really excited to see what you guys do in 2022. And yeah, I'd love to have you back on, especially if you end up raising a massive Series A, and find out where that's going to take you as well. So thank you very much.
Thank you, Alex, for having me and giving us the chance to share a little bit more about what we're trying to build.
No, yeah, absolutely welcome. Thank you, Anna. Take care. Bye.
Take care. Bye.